Hello, everybody. This is Noah and John, and we are from UrbanDigs, and it is Friday. So you're going to get your weekly Manhattan market update, and we got some things to talk about, Johnny. Let's go to supply, starting there, starting to see a pop 55.17. Show me that chart.
That is a pop. No, we're up 5% for the week before, and that's the first time we've seen a shift up of this kind really since September in terms of percentages. And if you look at raw numbers, we're back to where we were at the end of the year. But notably, it's the first pop of the season for supply.
Yeah, and it's notable because there's some macro things going on the side. We'll kind of hint to that later on. Everyone knows what we're talking about, and we need to see whether or not something's changing in Manhattan. So this is something, and we'll keep an eye on it. Let's move to pending sales, 42.18. Johnny, show me that chart.
Well, demand, Noah, is been strong, and there's no surprise there to see pending sales up another 1%. It's a slow turn here. This is a big number to turn around because you have to wait for contract signs to come in, and you're at the same time when you're subtracting all the ones that have closed. So it takes a while to turn this number around, but I think it has turned around. At least we've stopped going down, and it's on its way up from here, I believe.
Yes, that's a very good point. And if you want to break down monthly contract activity and get an idea of whether or not we're printing more contracts than we are than the historical average, you click on this chart. And you can clearly see from this chart, the blue line, Johnny, is showing us how many deals we're actually booking. The orange line is showing us what the historical average is. And I want to point out where we were last March, right? So last March, we were here. The historical average is just over 1,060. We booked over 1,500 last March. Okay, so that's a good reference point to have an idea of where we are when we go to the weeklies. I want you guys to know where the average is. And let's now shift to those weeklies. And I'm taking a look at supply, and there's 536 things. That's the pop. First time we're seeing a 5 handle. Johnny, show me that chart.
You're exactly right. It was the first time we've seen a 5 handle since the end of September, which was when you're getting that, fall push there. So this is the biggest weekly supply number we've seen in almost 6 months here. So it's really good to finally see supply start coming into this market. It's starved for supply. It could use every listing it could get.
Yeah, it's starting late, and I'm wondering if the macro has something to do with it or just a delayed listing season. This is what I'm thinking about in my head. I don't know. It's too early. We'll have to see what happens. And this is the point, guys. This is the point. Contract signed. When I look at contract signed, 336. There's no slowdown there. If there's going to be a slowdown, you're going to see it here first. So, Johnny, show us that chart, and we'll talk more about it later.
No, you're exactly right. No, I mean, it's up another 8% for the week before. At 336 is the highest number we've seen really since October. You have to go back then. I mean, it's just been a steady progression. We, sometimes when it gets slow, you see numbers well under 200 in the low hundreds or so, just as the market sort of, coasts. We didn't see any of that. Instead, as we saw just a pop right back up to 200s in January. And now here we are well above 300 and most likely heading higher in the weeks to come.
Right. And I want to go back to my market ticker right over here. And I want to go to 1 month. I want to click on 1 month, and I want to show you guys, right? Because 1 week is not necessarily a trend make. We're reporting on it because it's giving you guys a good pulse. But take a look at where supply is and take a look at contract signed. We did this. We looked at contract activity before, and we knew that 1,060 is what the historical average is. We're running at a 1232 pace. So in case anyone's wondering, are we liquid? Are we not? We are. I mean, we're running above trend, and it's probably early, and it's probably trending higher. So where we end this month, we're supposed to book 1,060. If we book 1,300, 1,400, I don't know. Time will tell. But I just want to show you that number will go down if something is happening in Manhattan real estate. So this is what I'm looking at for a leading indicator. Okay. Summarize: tight inventory, liquid, high demand market so far. Now let's go down to luxury. Contract signed, luxury contract signed. Okay, I want to take a look at monthly activity. We're not looking at price action here. I just want to point out how many monthly contracts the luxury sector is booking and where we really are relative to where we were in the past. And this is a wonderful visualization, Johnny, because what you did here is you got the green line, right? You got the green line. Let me get that out of there. You got the green line over here that's going to represent your 2021 average, and that's at 150. And then you got your 2020 average, which is going to be a yellow line down there. That's at 50 for 2020. Yeah. And then the red line is going to give you that whole average of the previous 4 years. And that's at 100. So it makes it quite easy. 150 we're at now. We were at 50 during the pandemic. We're usually right in the middle at 100. We're doing 50% more deals, John.
Yeah, no, you're exactly right. And if you look back let's just take 2020 out of the equation, because you don't necessarily want to compare absolute peak to absolute trough, because that just sort of, you know, skews numbers out of fashion. But if you look at that red line, Noah, it's what 100 and now we're 150. That's a 50% increase in terms of the amount of luxury deals. And when you think about how that's going to affect price, well, when those start closing, you're certainly going to see an impact from that.
And that's exactly the point of what I want to make to you guys. We are in a rising price action market. We are seeing it on a monthly basis. And a big part of that is that, look, this pandemic was not driven by studios. Okay. We had the Deanna Corey podcast before. She brought it out. Studios and that 8 to 10 million sector. Those are the two sectors that are really underperforming right now. So you're seeing larger apartments. You're seeing the luxury sector really come through. That is going to buoy price action for now. It's ultimately going to fade out of it, but that's where you are right now. And I think most people are tied to inventory. Most people are tied to.
Most people, that's exactly right. No, but I just want to clarify that. Look, I mean, just because you have studios, it doesn't mean that market's dead. That market's still moving. It's just people are not paying up for studios like they're paying up for size right now. And that's why when you start seeing the luxury numbers pop, that's where you're seeing it.
Yes, I would totally agree with that. I would totally agree with that. And we're in this tight inventory market. And John, you built this great chart that shows how much of the inventory is really fresh and how much is not. Why don't you tell us what we got here?
Yeah, so we're basically just looking at that blue line in the back is, you know, everything, right? And if you look at the red, that's kind of what's been on the market for, you know, more than 30 days. And the green line is sort of the new stuff, the fresh stuff. And as you can see, Noah, this last few months, wasn't since last summer, basically, that trend is sharply down and it really hasn't rebounded yet.
Yeah, and I think this is what a lot of people are feeling. Not only is inventory tight, but when you consider what the buyer pool generally looks at, and this is the key, this is what the existing sellers need to understand, is that the buyer pool that's out there, they're looking at that fresh stuff. And when you look at that fresh stuff, it is just a tiny fraction of what overall inventory is, which is telling me is that the majority of the listings that are on the market right now are on the market 30 or more days in a very active market. So the market, there is a market, there is a bid for the market. Price action is rising. We're probably at early 2019, heading into 2018. And I think the sellers that are not selling, they think we're at 2015 or 2016, and the bid is just dictating that.
Yeah, I would agree. And the other thing I want to point out is if you shift back to the middle, sort of the left-hand section of this chart. I mean, look at that rebound, right? From the credit crisis coming down 2012, 2013, same sort of pattern setup, right? We're coming down into low inventory, and then from there, inventory starts growing, right? As sellers kind of get the message, which is kind of what we're seeing now. I mean, again, 1 week is not a trend to make, but remember what happened with prices then, right? No, the prices ran up like crazy into 2015 peak.
Yeah, exactly. And we keep going back there. I mean, it feels like it's a 2012, 2013, 2014 situation. Johnny, thank you for pulling up all this data. I know we did a lot today. We squeezed it in, but I'm sure the viewers appreciate it. That is John Walkup. I am Noah Rosenblatt. We are both from UrbanDigs. Don't forget, if you guys got questions, we got answers. Just visit our forum right down here. If you want any of the reports we did, it's going to be right over here. Other than that, this has been your weekly Manhattan Market Update. We'll catch you next time.